morning and welcome, Patriot Radio News Hour. Joe and Jason. Happy Friday, baby. You know what? We haven't done it in a while. Sit back, relax, strap on that seatbelt, leave the driving to us. Put a shot of Jack in the coffee. Why not? It's been one of those weeks, one of those months, one of those years, really for the last 2 years. It just feels like it's just very, very chaotic. But that is why we're here, a really good setup here. I'm a little surprised, I thought Jay Powell was really bad Wednesday. Really bad. I mean, he was under pressure because nothing he said made sense, right? Hey, inflation's going to go higher, but we're going to cut rates. What? But just not right now. Just a little later. And transitory. What? And there's a lot of, the only thing he said that was true was, hey, there's a lot of uncertainty. Yeah, that's true. Okay. But the rest of it, right, that doesn't make sense. And then somehow, the funny part is they've decided, well, we're just not going to care about the short-term inflation. 5 years from now, we think inflation is going to be 2%. Well, guess what? They've been saying that for almost 5 years now. I mean, really, inflation started to pick up right around COVID, and guess what? They keep saying it, and of course, how the heck would anybody know what this world's going to look like 5 years from now? Do you care about 5 years from now? Of course you don't. But why did they say it? Because what else can he say? What else can he say? By the way, the taper, they're down to $5 billion now, so quantitative type. It was almost laughable. Why don't just go to zero? Get it over with already. We know there's, again, the illusion here. And it is an illusion. That's why you call us. That's why you go to allamericangold.com. That's why you get diversified. That's why you get a gold and silver IRA. That's why you take advantage of what gold and silver have been doing. Listen, it's showing you what happens, right? You do know, right? When does gold do well? When does gold not do well? Well, gold does poorly, right, when people actually think the central bankers have a clue that they can find their ass and they don't need both hands to do it. Okay? That's when gold doesn't do well. Think about it. Right from what? So let's call it from Reagan to the end of Clinton. You had that 20 years. They got to hide a lot of spending, right? How did they hide it? With the trust fund from Social Security, right? They did supply side economics and free trade. Yeah, right? Boy, we loved it. It was an illusion. And really, ever since that illusion has gone away, what have you seen? Gold and silver prices that continue to go higher. And here's the thing. Remember the end of the illusion. Alan Greenspan. We're going to pay off the national debt. And then we don't have to worry about Social Security and Medicare and Medicaid. And you know what? He was right. He was right. The only problem was they didn't pay off the debt, right? You got to remember, he made that comment that debt wasn't even $5 trillion. Right now it's 40, right? And guess what? We got to worry about Social Security, Medicare, and Medicaid, don't we? Elon Musk knows it. Believe me, he knows it. And I know whether you like Elon, hate Elon, you want to burn up Teslas or put your poop on it or whatever else. I don't care. He's not wrong. And this is why gold and silver are going to perform when nothing else will. 800-951 1-800-919-0592. That is the toll-free number. And Jason, we're hearing more FedEx today. Boy, brutal miss by FedEx. Their guidance was even worse. And Nike, same thing, right? They came out and said sales are plunging. Said that we'll be at the low end of the range coming out of Nike. And we've been seeing this all throughout, right? That the consumer-driven stocks have been horrible. On top of it now, FedEx, right? They're just saying, hey, listen, there's just less business stuff going on. Right? That's what it is. And then we got our first one. This was the first, Accenture. Now, a lot of people out there are like, well, I don't know, Accenture. Who's Accenture? Accenture they're definitely a big player out there. They do a lot of consulting. They do a lot of government contracts. They're the first. They were out yesterday saying that the feds, the government run money was 8% of their global revenue, 16% of United States revenue. And Jason, now we're starting to see some spillover into, I guess, the real economy now with these government cutbacks.
Well,
I took all your time. You didn't even get in.
I'm just surprised gold's even down today. How's that? Well, but can't go up every day.
I am, but I'm not. Hey, we're going to talk about that when we get back. A very good thing happened today. We'll talk about it. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Friday. A quick look in. The Dow's down. We'll see how big it gets. There is a lot. It's one of those end of the quarter selling days, squaring of books. So we can get a move one way or the other. But right now, the Dow's down 250. The S&P's down 28. The Nasdaq's down 100. The 10-year note a little higher today, 424. And again, I don't know, Jay Powell just talked a bunch of nonsense. It really did. And if you watched it at all, you can see the reporters like trying to grasp. Like, wait a minute, you're saying two things that both can't be true at the same time, right? And this is kind of the problem. Crude oil's a little higher. Again, most of this having to do with yesterday, the Trump administration putting restrictions on Chinese companies that have been buying Iranian oil that obviously will make, right, less oil out in the marketplace. Gold, it's down. It was down at one point all the way back to 3,000. A new higher low, and right now gold's 30.15, so continuing to kind of make back here, but this is really something as we keep going, right? This is the pattern, right? Higher highs, followed by the higher lows. Gold staying above 3,000. It really looks pretty comfortable here, and this is, I think that's surprising to some people. And again, there's a lot of, I'll just say this, a lot of window dressing with the Fed the other day. Wall Street's just pretending that they like it because they still said 2 rate cuts. That's all they cared about, right? 2 rate cuts, but if you actually listen to what Jay Powell said, you'd walked away scratching your head a little bit here. But as we look at this setup here, this is just nothing more than an opportunity to put some more gold away at a little lower price. We got two great videos out on allamericangold.com. Jeff Gunlatch, you should check him out and his critique of the Federal Reserve. He's out there. He actually just said, hey, listen, I'm 50, 60% that recession's coming. I don't think a lot of people really understand what's at stake here. Peter Schiff also out today. He's talking $50 silver by the fall. I don't know about that, right? But it's all about the reasonings behind it all. By the way, silver's down today. Again, take advantage here. 32.83. But you got to remember with silver, right, we don't care. I know that it's wrong to say we don't care. But when it comes to silver, we're looking at that May contract. That's the one that matters. Well above $33, $33.50 on that May contract. So both gold and silver, we're getting higher highs, higher lows, and I think when Monday rolls around, it's going to be very interesting because now the focus is going to be, Jason, April 12th, and these tariffs, that's going to be the focus. And they've been, the Trump administration is, I think, this time around, now granted, I thought they were very sloppy with the first set of tariffs. They're on, wait, no, it's a delay. Well, now it's this or that. Remember, a couple of important things. We know what we're calling reciprocal tariffs that are coming, right? A lot of that targeting the EU and others, letting us know, hey, you can see on certain things that are much higher than 25%. But the other part that I want to mention, now remember, with Mexico and Canada, he did give them another month for the Mexico-Canada-U.S. trade agreement that Trump had signed in his first term. Remember, 50% of the stuff from Mexico was covered under that. 38% of the stuff from Canada was covered under that. They didn't get the 25% tariffs. They're supposed to this time around. So, Jason, there's a lot more coming here in a couple of weeks.
Yeah, we'll see. Like you said, April 12th. How much money are they going to spend, right? How many bills are they going to increase? You know, inflation means more dollars for the same thing. So the government never does. They're never satisfied with the same. They always want more, and then you pour inflation on that fire, right? So I think they're worried about how they're going to try to pass whatever this monstrosity is going to be without people checking it. Like the Nancy Pelosi thing, pass it, and then we'll see what's in it. I think that's definitely what they want this time around for the spending bill.
Well, and when we look at, think about what's happened in just the last few years. Gold was less than $2,000. It's now $3,000. Matter of fact, gold was $2,000. And, we always say the gold and the dollar, right? Gold and the dollar. Strong dollar, weaker gold price. Weaker dollar, higher gold price. That has been kind of the standard boilerplate when you talk to people about gold and the dollar. That's what they always say, right? Okay, when the dollar's strong, gold goes down. When the dollar's weak, gold goes up. That relationship has broken down. It's completely broken. In other words, what they're saying is, hey, this whole you're the cleanest dirty shirt in the laundry thing, that no longer works anymore. Forget that. We don't care if you tell us that the dollar is stronger against the Japanese yen. So what? Oh, it's stronger against the euro. Do we care? The British pound? No, we don't care. Case in point, The dollar is up 10% from gold going from 2,000 to 3,000. So gold rises 50%, and yet the dollar was 10% stronger. Now, the big thing is what everybody is saying is this is kind of the end of dollar weakness. Matter of fact, if you listen to Jeff Gundlach today, he's like, oh, we're out of U.S. He is Warren Buffett to the max. He goes, we've unwound all our leverage. I'm getting cash. He goes, just like I've been telling you, nothing is cheap in the U.S. stock market. He goes, yeah, the prices are down. They're still not cheap. But he said, listen, everyone's going to Europe right now. Why? Because all the European governments are, they're what? They're spending, they're going to spend like crazy. Get ready for the next bout of dollar weakness. And I think, Jason, a lot of people are expecting this is going to be what moves gold from 3,000 to 4,000 is the dollar weakness part of it, because everybody says, listen, the only part of that equation that broke down was stronger dollar equals weaker gold. Weaker dollar is still going to it's just going to mean even stronger gold.
Yeah, well, and no matter the markets, if the amount of money increasing is going to start happening again, it's just going to make gold more expensive. I mean, we didn't have this higher level of inflation until after COVID, but look at the early 2000s, Joe. You were selling gold, and we had $300 an ounce gold, or $500 an ounce gold, $1,000 an ounce gold. Well, I mean, without the higher inflation, and we had the housing crisis, right? You know, the economic meltdown of 08, 09, but gold kept going up. It just kept going up because the dollars kept increasing. So no matter what the ups or downs of the economy, or what war was happening, or what wasn't happening, or what president was in place, they're going to keep printing more money. And I think what's getting people sort of, worried in Washington, D.C. and in the business world is the numbers are just getting so big that it feels like there's no way to continue with what they're doing, because it's a game. And if you spook the people playing the game, you can't collect their money, right, Joe? You can't you spook everybody. So they're trying to quietly and nicely make you have a lower standard of living. That's basically what it is. You're gonna have less for you, more for them, and as long as they can get your face, into a cell phone or a television, everything will be fine. You'll just, when you have no money, if you already paid for your phone bill, then I guess you can, entertain yourself sitting on a couch in some crappy one-bedroom apartment, with the paint falling off the walls, and you have one of those landlords that doesn't fix anything, right? Yeah, this is where we're headed.
The slum lord.
Yeah.
The slum lord.
I mean, that's what we're all. I've seen have you seen Elon Musk? Is he's going to take? He's one of those guys. He's on the in crowd, right? He's selling those little one bedroom. Have you seen these little tiny homes he's selling now, or he's getting ready to sell? He's going to sell you your lower standard of living. All that stuff on TV about tiny homes. Oh, this is great. This is a great way to you're living a limited lifestyle. This is the way it is. It's just less stress on your life. No, it's because all you can afford is a little box in your kitchen, in your living room. You can sit in your living room and cook your food at the same time. That's not quaint or fun, or that's a bad gimmick. That's lower standard of living. I mean, I remember my wife got an apartment years ago, and she got this little one-bedroom apartment, and there's this one tall guy that came, she has some friends over, and this guy could put his back on one wall and put his feet touching the other wall. That wasn't a higher standing of living. That's a crappy little one-bedroom apartment, and it's cool, if you're young and you have less money, I get it, but it's like that's not where you want to end up, What are you going to raise a family with 2 or 3 children where you can have feet on one wall and your back on the other wall? But Elon Musk is going to, I have to look it up, Joe. They have these little things he's going to sell. There's, I don't know, a Tesla home. It looks like one of those what do you call the streamline, the silver
right? Yeah.
Homes. Yeah. Yes. It looks like a smaller version of one of those.
Well, that, and look, they've done a great job. right? They've convinced you that these tiny houses are cool, right? Hey, look at what we can do. And like Jason said, you can sleep, crap, and eat all in the same space. I mean, how great is it? I mean, come on, right?
I'm a minimalist. Come on, man. I'm a minimalist. I'm saving the world, and I don't need much. I don't have to think about much. Of course, they don't want you to think about much. That's how they got you to buy into a one-bedroom little house on wheels, and then this is going to be the cool way to live. You know, because, Joe, I mean, these houses, a starter home is, $400,000, if you're lucky. And these things will be, I don't know, $200,000, and maybe you could put it on a trailer and drive it around, right? And, well, that's cool, though. Yeah, it's on the TV. It's cool.
Yeah, you're not tied down, right? Who wants to own property? I mean, owning property sucks, right? Come on, right? I mean, you just pick up and go. How great is it?
I mean, California's way ahead on this thing. You take your RV on vacation to California, and the police pull you over, and they make sure they give you a bill for your taxes for the 5 days you're going to be there. You can't even escape the taxes. You go to every state at some point in the future is going to have you roll in there with a different license plate. The police will pull you over and give you the bill for the 2-week vacation you're spending in that state. Here's your tax bill. Here's your property tax bill. Just because it rolls doesn't mean there's not taxes, and you're in our state now.
Oh, yeah. Welcome to Friday, baby. We'll be right back. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Friday. $10 liberties. And this thing is... I mean, hold on. I gotta go back. I was almost ready. I thought I was ready. So... $70 less than yesterday. So figure it, $10, that's a half an ounce. $70, that's like $140 drop in the gold price. Gold's down 30. So this is a huge, huge opportunity again. And I've got like 100 of these things. I got a ton of them. $10 liberties, 1866 to 1907. Back when our currency was backed by gold. You know how much inflation there was between 1866 and 1907? None. Crazy. Wait a minute. I could buy half a cow for $10 in 1876, 1886, 1896, 1906. Yep. We don't have that anymore. Matter of fact, the central bank, listen to Jay Powell. I mean, we're telling you 2%, but it'll be later. Right? We're not going to actually do anything about it. Matter of fact, we're going to tell you inflation's going higher this year, but we're going to cut rates anyway. I mean, yeah. Jump on these here. $15.90, $70 off on a $30 drop in gold. And remember, $10, that's a half an ounce, so that's $100. That's like gold being down $140, right? Gold is not $2,800 and change today. It's $3,015. I mean, what Wednesday was $3,035. I mean, $800. 951 0592. I'm going to show you how things are changing. So, as you know, all these banks, right? They come up with these stupid gold prices because they can't help it, right? They need to believe that central banks work, right? They need to believe that fiat money doesn't go to zero. They need to believe that they're solvent, even though we know they're not, right? They got to believe all that stuff. I get it. U.S. Bank, their senior wealth management guy, they were talking to him about, hey, what do you think about gold? And he goes, my team has talked more about gold in the last 6 months than it ever has in the history of U.S. Bank. Now, here's the funny part. He's still not buying it, right? Right? He's like a lot of people out there. I'm talking about it. Matter of fact, our team is talking about it. But no, I'm still not doing it. But here's the funny thing that he said about not doing it. Why did I bring it up? Why would I bring up a guy that says, don't buy gold? He goes, there are reasons in the economy and with its uncertainty, and he's hoping, he's like, well, you know what, I'm just saying don't buy gold because I think the uncertainty is going to work out in our favor. Now, he doesn't say why he thinks that, right? Because he can't. There's no real logic that says that it will. But he said if things change, $3,000 is not expensive. In other words, yeah, I'd buy gold right now. If I thought I'd be buying gold. $3,000 isn't the issue. This is why I'm sharing this with you. Because he admits it. He knows. $3,000 gold, Jason, it's not expensive. And he admits, oh my gosh, that's all we talk about. We're always talking about gold right now, but I'm not ready to give up, Jason. We can somehow, I don't know, pay off the national debt, drive growth, and kill inflation, and we can get the miracle.
Maybe you should buy it then. Maybe you should buy it, right? When you're super wealthy, you can go in a lot of directions. It's when you're not super wealthy that you have to be a little more careful with your money. You have multiple millions and millions, and you have billions of dollars. You can throw things around to different places, and if you know markets really well, you can make money on the way down. You can make money on the way up. If that's your job, if that's what your passion is and you're into, you'll make a lot of money doing that. So that guy doesn't have to buy gold and silver. I get it. He could lose, huge amounts of money, and he doesn't need gold and silver. That's not who we're selling to. We're selling to the ultra thrifty, guy who buys a roll of silver dimes, to the guy who's done really well but doesn't know really where else he wants to put it, and doesn't know the stock markets as well, right? And so, we have big customers that come in and they buy a large amount. We want all that. Those are the people that we want, right?
Yeah.
Elon Musk isn't going to come buy gold from us because, I don't think he's a gold guy. He's build a company, sell the stock, and build another company, and he promotes his thing. You got to have your thing, right? You have your thing makes you money, and you save it in gold. That's how it works.
The funny part is, this is what I'm saying. This guy's an idiot. No, he's not. Is he an idiot? No, he's the head of U.S. Bank Wealth Management, right? Right? Take some of that and put it in gold. And he even admits, hey, I'm not sure. I don't know. We're talking a lot about it, but you're right. Is it a risk or is it an opportunity? We haven't made a change to include gold because he says inflation remains uncertain. It does. It is. I think it's pretty certain. But don't be that guy. That's why we always say, don't put all your money into gold. But you better get exposure here. You better start putting it away because eventually you're going to do it. And why do it? I think very quickly. And this is the problem. Because right now things are still good, right? Jobless claims yesterday, 223,000. It's almost like Doge isn't firing anybody. It's hard to fathom, right? We look at all these look at Darden restaurants. Sales suck, right? Night, sales suck. We're going out of business. But it's still hanging in there. When the crash happens, it will move very quickly. And I think that's the big thing. Peter Schiff is kind of saying he thinks silver is going to go from 33 to 50 in a matter of months. 800-951-0592. Today's special $10 gold liberties, half-ounce gold liberties, $15.90. $70 off from yesterday, right? The equivalent of a $140 down day. Gold's down 30, right? Take advantage here. 800-951-0592. So why do we say that it can go this quick? Why would Peter Schiff say we could see $50 silver by the fall? This story just simply continues to not go away about the lack of physical metal in the London markets. London has always been the major market for gold and silver. Really for all the metals. Copper, remember we talked about copper yesterday. Back above 10,000 a ton. The clearing banks of London have exhausted the metal they have for delivery in their own vaults. Now, we've known this. We knew this. They've been trying to borrow as much gold and silver as possible. Remember last week I was telling you about the lease rates in silver. And that's what this guy is talking about here. This is Rowan Manley. He's talking about lease rates. Well, what does that mean? It means that London, they're out of deliverable metal. So they're trying to essentially borrow somebody else's metal, i.e. lease it, so it can be delivered. And then, hey, when we get more of our metal, we'll give you your metal back. In other words, hey, you give me your physical metal, I'll pay you a fee for you giving it to me, and then I'll give you the metal back later. Right? That's the leasing. The clearing banks, J.P. Morgan, HSBC, UBS, and then China's Development Standard Bank, ICBC Standard, that's the Chinese bank. Those are the four. Need to keep gold and silver in their vaults for their own London liquidity. And it looks like they don't have any more to do this with. So what does that mean? Well, that means those banks have essentially said, we've loaned out all the metal that we're willing to. In other words, what we have left, we've got to keep for us, right? We've got to make deliveries too. Counterparty risk continued to rise. They're saying that the unallocated credits, the market makers, they're Jason, now all of a sudden they're having a hard time. How do we make the market if we don't know if there's metals to actually be delivered? And this is why I say things could go very quickly if there's a hiccup. Right? And how many times have I told you how the market has been priced for perfection? Jay Powell did what he had to do Wednesday, which was lie. He lied. Why? He had to. I have to tell you that inflation's going higher, but we're going to cut rates. I've got to say it. I have to. And I have to say transitory. I got to say that, once these tariffs come in, after that, then it'll get better. It's not happening. One hiccup, and you see another overwhelming response, and it doesn't even have to be that overwhelming, for physical gold and silver Jason, this will set off. This is how you can get. How can you go from 33 to 50 in 3 or 4 months? This is how. Because the available product isn't there. This market, it's always been there. And if it wasn't there, we could always go to JP Morgan or HSBC or UBS, China's Bank, and borrow it. They can't borrow it anymore, and this is why this is why people are saying you may be very surprised how quickly these prices can move.
Very quickly, and I think I made the analogy just yesterday, but these gold moves from previous years, a decade, 15 years ago, whatever, 300 gold to 400 gold or 600 gold to 1,000 gold. As a percentage, if you look at that, where we're at, it can make a 33% jump very quickly. Joe, it's done this many times. So a 33% jump takes gold from 3,000 to 4,000, and it can happen in a couple of weeks. Look at everyone keeps talking about look at what gold has done in 2025. Everyone's talking about gold in 2025. Well, what about 2024? Right, Joe? It started in March, and it went up from $2,000 to $2,400, $2,500 very quickly. How come nobody wanted to pay attention to that? That was $500 of this rise, and it was in just, 2 months, Joe? 2 months. It went from $2,000 to $2,500. Every Friday it was going up, every Monday it went up, and then boom, another $100 by the next Friday. And it did that for several weeks, Joe, and it never looked back. We'd have never talked about 2,100 gold, 2,200 gold, or 2,300 gold. It just didn't exist. Do you remember 2,400 gold, Joe? I don't. It was like a blink.
We kind of skipped it, right? Really, how long were we in 2,900 gold? A couple weeks, right? The question now is, are we going to skip $200, $300, and $400? Are we going to skip $3, $4, $5 in silver at a time? That's what's kind of sitting on the table. Final segment. 800-951-0592. You know what? I was kind of sitting here during the break, and it just kind of popped into my head. Whatever happened to the audit of Fort Knox? Did that just kind of disappear? Right, we're going to go check it out. Remember, I haven't heard a peep about it, Jason. I haven't heard a thing.
No, yeah. It's funny how certain news items just sort of disappear, right?
Shh. Wait, did I say that out loud? Oh, was I not supposed to say that? Oh, my bad. Okay, we just won't say it again, right? We haven't heard a word about it now.
Yep.
I wonder why. Maybe you want to call 800-951-0592, $10 Liberty gold pieces, 1,590. Yesterday they were 1,660. That's like as we said, like gold being down $140. It's down 30. Listen, this has been the pattern for the last year and a half now, right? Buy every dip, every pullback, and the I don't know that it's funny, but these pullbacks, you're lucky if they last a day or two. Seriously, a week would be a lot. Like that would be like, oh my gosh, gold was down for a whole week. We don't even get that anymore, Jason. It is incredible how quickly every pullback has been bought in so far for the last, like I said, for the last year and a half. That's how it's worked. And now you even have the wealth management guys going, listen, $3,000 isn't an issue. That's no problem, right? It's just more or less, do I want to give up on the dream or not? That's really all it is. Yeah,
there's some stuff that's getting ready to go down. So I've been looking at different things, Joe, and gold revaluation. there's a bill that's sitting there that they're trying to pass, and they want to link it to Bitcoin and through the government. And I'm telling you, there's some strange happenings, Joe. And hold on to your hats. Hold on to your hats, because it sure looks like they're going to. It seems like they're going to invent a new money printing scheme. That's not. It won't seem like it's the dollars that traditionally get passed around in Washington D.C. They're going to loop it through Bitcoin, and hold on to your hats, Joe, because if Bitcoin goes up, people that are into that stuff, they get all happy, right? But does that mean it's actually going to be helpful? Printing up money and putting it into a space is still printed up money that goes into a space. It can still inflate things, and by increasing the gold value, regardless of how it affects the gold price for the buyer show, what we might be looking at in the next few months, in the next couple of years, with what they're trying to do with digital money is frighteningly dangerous to the average person, Joe, if you're not prepared for it.
Well, I mean, you never like to, use, it's frightening, but it is. I mean, that's where we're at, right? The whole system, right? We're like, man, can we keep it going for a little while longer? And how do we do it? And you're right, it is frightening, and it shouldn't be. But that's just kind of the world we live in now, right? I mean, we got to accept the reality.